There we go.
Hey everyone, my name's Andy. I'll be your host today. We've got Kasper with us. Wanted to bring him on, ask him some questions about potential recession coming up. We hear recession, recession, recession. It's like every other YouTube clip that comes across. They're talking about recession, a slowdown. Let's see if there's any merit to it. Wanted to get his opinion on it. So thanks for coming on, Kasper. Really appreciate it.
Yeah, my pleasure, Andy. I think it's only been like 3 weeks since we talked last time, so I was kind of surprised you wrote to me this early. But this time it wasn't about uranium or gold. It was a totally different topic. I don't think we've talked about this before, so that's a good, fresh new thing to do. It's gonna be fun. It's gonna be fun.
Yeah, so I wanted to bring you on just to talk about this and if there's any merit
Yeah.
to a potential slowdown coming, if you see what other experts are seeing out there. And I've got my opinions on what potentially could occur, and my opinions are just from looking at all the charts and then forming opinions across all of these hundreds or thousands of charts that I always look at. In your opinion, what do you see? What what forms your ideas or your opinions? And I understand that calling for recessions, timing this stuff is incredibly difficult. And I'm not asking you to put a prediction in front, but is the data and are the charts showing signals of a potential slowdown that you look at?
Yeah, I mean, first off, as you say, calling the top or a recession, tomorrow is you very rarely do that. I also tried to do it like 2 years ago, 1 year ago, saying this is the top in the SPY and the Nasdaq. And what have we gotten? It just kept on climbing. So it is very difficult. So all you can do, at least from the experience that I have learned from that, is to observe again what you do the charts and to not to call it top, but to start to become, having attention that maybe we have something going on that within the next 3, 6, 12 months, again, the time frame, incredibly difficult. But potentially there is some charts that is pointing to that. That's probably where we're going.
Mhm.
But yeah, let's have a great discussion. And yeah, some charts are showing that it is coming. Some of them is just it's a bit of a mix. So again, very difficult to say
So
really.
the things that you look at, what would you consider to be some things that you look at where you're like, wow, this looks pretty this looks pretty bad and we could get a potential recession. What are some things that you're seeing in the markets that look negative at the moment?
I'm basically looking at two charts that has my full attention when it comes to, if I were to say these are the charts that is screaming recession within like a year. And that is, the spread between the tens and twos, that is the US 10-year rates and the 2-year rates, but also the unemployment rates, which is climbing up. And the previous 3 times we saw that, even 4 times, I think, that, after that, within a few, months, whatever, you had the recession coming full time, or at least a big drop in the indexes. So should we take a look at the tens and twos?
Let's do it. Let's
Because
dive
I
right
think
in. Let's take a look.
it speaks a lot of volume really. So 1 second here. It's the tens and the twos. Cool. I'm sharing the screen there. Hopefully.
You're good.
Cool, cool. So this is basically the difference between the 10-year rates and the 2-year rates, going back, what is that, 40 years or so, roughly 30 to 40 years. So we have quite some data. And I know you also look at this chart, every once in a while in your videos, and I assume you discuss it sometimes with your audience as well. But basically, what it's being used to is to see, are the investors more fearful of the short term or the long term? And what we have seen here in the past, what is that, 2 years or so, we can clearly see that the 2-year rates has been a lot higher than the 10-year rates, meaning investors, the bond market is a lot more fearful in the short term compared to the long term. And I want to go to the monthly here, and that might be a bit better. So like I talked about just before we saw the screen here again, basically I think we talked about this last time as well. When you get the inversion, meaning that when the 2-year rates is becoming higher than the 10-year rates, that in itself is not a problem. It is when they uninvert, that's the big deal. So we can go back here. This is basically, we can actually go a bit further back here to the start of the 1990s. Again, we had the inversion, and then you started to grind a bit, and then you blasted higher. And that's the first one. And then the more famous one is the dot-com bubble. The same thing here again. Finally, the 2-year became more, the rates became higher on the 2-year. And we stayed down there for roughly, what is that? Basically 1 year. We stayed below the 0% line. And everyone basically knows what happens after that. You had one of the biggest crashes, in the modern history with the dot-com bubble, where you actually had Amazon losing 95% of its value. Yes, it has regained a lot of that afterwards, but still losing 95% that's a major blow, obviously. Then later on again, we had the big event, the global financial crisis again back in 2006, 2007. We were dipping below for roughly 1.5 years, maybe a bit more. And what we're seeing now is actually something that we haven't seen before. We have seen it, get below, basically getting inverted, but the depth of it and the length of it right now is just something we haven't seen before. So that is probably telling us that something really, really bad is coming our way due to the depth, but also the duration. Given the fact that we've been inverted for let's do a quick measure here. Yeah, roughly 2 years we've been inverted. And the last 2 times we went negative 0.5%, and now we actually went down to minus 1%. So the inversion were double in size, but also the duration is a lot longer. So from this chart alone, something bad is potentially in the horizon here, just by looking at this. And just before
you have a breakout there, right?
Yeah, we actually do, and that's a bit terrifying. You can see here that we had a deep inversion here, and then ever since we have basically done like some sort of cup and handle, and we're breaking out. Basically 2 weeks ago we broke out. We're coming into this. I will say it's kind of like a zone here. Maybe it should be a tad higher, but anyways, you can see here we have the wicks over here. So we're basically in this zone where we could at any moment in time start to see the uninversion happening. But it could also be just like we saw over here, in the 90s, that we're getting a lot of back and forth between that zero line, and then it happens. So again, timing wise, it could be in 3 months, it could be in 12 months. Very difficult to say, but the chart here at least is pointing to a major recession of some degree, or some event, whatever you want to call it, is happening. So yeah.
One thing I do look at when the yield curve uninverts, is it uninverting because the 10-year is going up, or is it uninverting because the 2-year is going down? So when I look at like the 2-year yield, that to me looks like it's rolling over and is potentially breaking some support to the downside, which means that yields could fall, the Federal Reserve could lower yields, and maybe they see a slowdown in the system coming. When you look at the 2-year yield just by itself, do you see a rollover in the 2-year yield signaling that, it's USO2Y?
Yeah, I have the 10-year yield here just before we go into the 2-year, and we can clearly see that it is losing. I assume it is the same on the 2-year, but we are potentially breaking down here on the 10-year. You can see we're dipping below, retesting. I wouldn't call it, like breaking down. It does look like it's breaking down, but I want to see a bit more panic, you can say, before I say, all right, this is it. Because you can also argue that you do have some sort of potentially, to the upside. But for now, at least, we have broken the 30 weekly. We're back below the big pivot that is the 4.3, and we have lost the uptrend there. So I agree. It does look a lot more like, it's going down. The 2-year we can have a look at. So I'll remove a few little stuff there. I didn't prepare this one. But same thing applies, basically, roughly the same chart. A bit of an icing on the cake here is actually you also have topping pattern clearly. So again, if you measure the height from the head down to the neckline, again, you will get like a move down to roughly, I don't know, 3% or so, depending on how good you measure. But again, that is also pointing to a lot lower rates. So yeah, rates are definitely falling, both in the short term and in the 10-year. And I guess the 30-year is a bit more stable, but it's probably not going up. It might be a bit more stable, just staying where it is, going down a tiny bit. But yeah, I agree. They are both on the path of what we can see for now, at least, to go down.
Yeah, and one of the things that seals the deal, these start to move first, and what I've seen in history is the 2-year dropping like a rock is something that precedes a slowdown almost always. So you'll see it drop, and then sometimes it does a waterfall decline if the slowdown is seen by everyone. One thing that I always pair up with the 2-year to see and give me more confidence that a slowdown could occur is the unemployment rate. And the 2-year and the unemployment rate, they move opposite. Unemployment going up, 2-year going down for yields. When we look at the unemployment rate, that doesn't look that great either, does it?
No, it doesn't. No, it doesn't. Just before we go there, Andy, can I show you something on the TLT?
Sure. Let's go for it.
Just again, just to look at the other side of the coin, really, because in March 2020, the TLT is basically, the US Treasury bond market. So when rates drop, it goes up. It's the inverse. So if you're betting on rates going down, you can actually buy into the TLT, and you should do, a profit from there. But in the big March 2020 event, you basically had the bond market at that point in time it broken. So what have worked for 40 years at that point in time broke. So again, with the whole on inversion, I'm not saying that it is not important. It is, but again, something has changed 4 years ago in March 2020. Again, maybe that's why you see this steep of a on inversion and also the length of it. So again, there could be some other factors and other events coming because the bond market broke, and it is a different bond market now than it were, for the past 40 years until that event. Basically, what you're seeing is, I like to call it the earthquake needle moving. So you have a lot of friction going on, and then when the earthquake is happening, you get this huge spike, and then you're done again. And after that, the two tectonic plates has moved and is then again, building a new kind of system, a new pressure. So just to note here that the bond market has changed. Again, I'm not saying that, as mentioned, that the inversion and inversion doesn't matter, because it does. But again, it might have a different meaning this time around. I don't know, just a little bit of a thought there. So
opinions and thoughts. Yep.
Yeah, exactly. Just to open some people's minds on that one here. Good. Here we have the unemployment rate, and I want to have not that one. I want to have this one here. Is that impossible? I had the okay, never mind. For some reason, I cannot see the moving average. But anyways, it doesn't matter. As you mentioned, and also what we talked about, the unemployment rate is also a very important metric to see if we're into a slowdown. And again, you can see these rolling over or just coming back up again just before the big stuff is happening. And again, it's quite obvious that we are seeing the exact same thing right now. So unemployment is coming up, as you mentioned, rates are coming down. So you're getting this, inverse move. And yeah, the last 4 or 5 times that this has happened, you have the slowdown coming in. So yeah, you have two big metrics, which is used by many people, the 10s and 2s, and also the unemployment rate, showing that it is probably not the best of times that is ahead of us. Again, timing wise, who knows?
Yeah, the difficult part is I've heard arguments that perhaps the bond market is not the same as it used to, and its predictive capabilities, maybe not predictive, maybe its ability to tell us where we're at in the cycle is changed. And then the unemployment rate, there's also people who try to explain that away too, saying that that it's different this time around. And I can't get over it. I think that the risk of a slowdown, given these leading indicators, that we very well could have a slowdown. So when you look at all of the charts that you look at, and I know you look at a ton of different charts, just like I do, and maybe we could pull a couple up. What are you seeing that potentially could manifest itself that these leading indicators are in fact right, and we can prove it or we can disprove it while looking at maybe the S&P 500 or maybe Nvidia or SMCI or some of these big kind of Goliath companies, Google, Apple, what are you seeing there? Do you think we could use those charts as a indication that we are in fact rolling over?
I think rolling over it's very rarely that you get right now we're almost at all-time highs roughly on the SPY and the Nasdaq. I know we've dropped a bit here, but we are close to the highs, and it's very rarely that you just see a steep drop from there. Usually you see the rollover. It's like a big tanker. It needs to turn, and but I do see some potentials here that we could be in for. Again, calling it a top is not. I've done that before, and again, I will not do that again. But potentially, we are coming to that point in time where we can be at least trying to top out or just chop for a long time. Basically, we had this big breakout from January 2022 over here, and we've actually rallied quite a bit. And we have formed this rising wedge, which we are in this week actually breaking down from. We did try to peak above just briefly, and then we came down. And that's an even more bearish signal because you're trying to move above, and then you're just seeing sellers stepping in, and then you come. Usually what's happening when you see this little bit of a peak above here is that you see the peak above, and the sellers are coming in, and usually you come all the way down to the other side of that channel that you have. And now we're basically breaking down, retesting, rolling over today here. So again, very early. You can still see that we have the third weekly is coming up nicely. So again, not calling for a crash, but we could see some signs that we are slowing down. And what that means in like half a year to 1 year, I don't know. But potential slowing down here is in the cards. But again, it's very, very early to call a top here or anything as we speak.
What about IXIC? That's the Nasdaq Composite Index. It's probably going to be almost exactly the same as the S&P 500, but this is where I think the slowdown is going to come from, if I were to make a guess. And I'm not stating that I can predict a top or anything like that, but if I were to take a guess of something topping, this is where I would be looking. Would be the Nasdaq.
Yeah,
That's
I mean, the Nasdaq has done incredibly well. Even though I haven't participated fully in it, I've just basically had some shorter term trades, which is fine. But again, the Nasdaq again has done incredibly well for the past 2 years. And again, I've been trying to call the top many times in the Nasdaq. So again, I'm not going to do it here, but at least we have come a long way, and we have actually had, in this case, actually 4 big major tops. Usually you only see 3. But again, we have had this fourth here. What that means, I don't know. But again, a pause of some kind here does make sense. It really does here. Does that mean we're going to pause here for like 1 year and then roll over? Potentially. But the Nasdaq is definitely has done well. But at some point in time, you also need to reverse a bit to the mean and then see if we have more energy to go higher, basically. But I also want to note here, yeah.
Sorry.
Yeah, and just to prove my point before, we're not going to crash like that. I mean, it can happen, but the odds is that you are basically starting to chop a bit more around. This is drawn insanely quickly, by the way. But again, you need there's a lot of dip buyers here along, still on the way down here. There's a lot of dip buyers, and at some point in time, if it starts to fail, the dip buyers is going to step out of the way, and then you see the big moves down. You saw the exact same thing in the 08 crash, by the way. So
yeah, there's also people who think that this is going to continually go up because of a variety of different reasons, artificial intelligence, et cetera, et cetera, et cetera. What about inflation and the money being created by governments? Fiscal spending is what they call it. Continuing to pump the system. Is there a way that this corrects, but it doesn't really get a big crash to the downside? We just go sideways for a really long time. I mean, that could be a potential outcome too, right?
yeah, for sure. And we did similar in the 70s, into the 80s. Obviously at that point in time, commodities did way better than the index. But actually, I remember it to go up quite not a lot, but it did drift up a little bit, over that that period. But if you measure against inflation, you have lost value or buying power. But again, it did go up, just not as much as gold and silver and all that, commodities. So yeah, definitely it can. That is also a possibility. I will not rule that out at all. But yeah.
What about I know you've got copper up there. What's Dr. Copper saying?
Dr. Copper. Yeah, copper is always a good measure to see how things are going, really. It's basically the barometer of, economical activity. And we had this big break at $4. We broke out, we retested it. And at that point in time, I became hugely bullish. Actually, upon the break, I became really bullish. The target were $5. We overshot a bit. And now we have actually corrected a lot more than I would have thought. We have actually come down quite a lot, actually. We can see here we are down 22% or so. But basically right now we're coming into, again, that big $4 level where I'm expecting buyers to be stepping in, because before it was such a big ceiling to take out, and there should be a lot of buyers there. But again, you can see if we zoom out here, this drop that we have seen in copper, again, they don't come, at least not in that short period of time, they don't come that often. So it is actually quite a big drop that we have seen here. And again, this could be a precursor of something, down the line. Definitely.
Yeah, it looks like it follows the 10 and 2 or 2 and 10 yield curve on inversion too, because it uninverted at like 2016. It uninverted before that, and then it went back up, and then it uninverted around 2017, 2018.
Yeah.
That more or less is copper just going with the yield curve going up and down of the 2 and 10s, is what I see. So
Yeah, that's
we're
actually
seeing the two.
yeah.
Yeah, we're seeing the 2-year drop, and that's going down. So I mean, it's like the overall markets, and then the overall opinions about the markets, given where bond yields are going, everything else is just a derivative of it, is what I've noticed
Yeah.
when looking at all
Yeah.
this stuff.
Yeah, and there's actually also a that, by the way, what you're talking about, copper and the tens and twos. That's a good point. I haven't looked at that before, and I will check that out after the video, because that's a very good, very interesting statement there from your side. So I will definitely see
Gold
what.
just does the opposite of what copper does.
Yeah,
Sometimes, not all the time.
I'm gonna
but
check that.
sometimes.
It's very, very cool. But also there's a fractal going on here that is actually also not looking the best. If we go back here to 2006, you can see here that we have this kind of like a rising wedge pattern there, and then we had this steep drop. Yeah. Snap back, a little bit of a higher low there, and then we barely breached the previous high. And if we do the same here again, you can actually see that it's not the exact same. You have again, this huge drop here is the drop you have there. And then again, you made this higher low there, higher high, and then you barely breached again the previous high. And then you're coming down quite hard. So yeah, fractals work, on every time frame and ratios and all that good stuff. You know that you do a lot of ratios and fractal analysis yourself. So these two here, also, by the way, look at the move until that happening. So they are very similar, very, very similar, by the way. And after that, you actually were in a long drawdown. But the funny stuff is this actually happened after the recession, more or less, right? Because the recession kicked in roughly 07, 08, and this is topping out in 11. So yeah, I don't know exactly what the meaning of that is, but again, yeah, timing wise, it could be the same. I don't know.
Yeah, it's tough.
Yeah, mixed
Tough to know.
signals.
Yeah, I'm just looking at that fractal. The one on the right looks like it's just smaller and compressed.
Yeah,
And
exactly.
maybe we're in an up move already though. Like maybe we're in 2000 something, early 2000s. That's off the chart. Yeah.
Yeah.
Like we're in the beginning of the beginning move. Maybe.
Yeah, it could also be that if you have, again, and this is that, same thing here. And then, yeah, I don't know, maybe this, I don't know, again, mixed signals on the copper. But even though, it does look a bit grim here for copper, overall, I think the state of commodities now compared to like 15 years ago is at a lot better place. So a lot better, actually.
What about Nvidia? I'll just ask that. That everyone,
Yeah.
I feel like everyone and their mom is in this stock, and I want to see this thing roll over.
Yeah. Yeah, I mean, if I'm not going to add a lot of lines here, but just look at the incredible move that it has had for the past 10 years. Again, ever since we kind of started to break out over here, right? We had that, you can just see that it has just been, that is amazing. We have to acknowledge that and say that, this has increased by what, 200 times or so, right? From roughly, yeah, 200 times. And that's incredible. But at some point, it comes to an end. And as we know, I have also called the top many times on NVIDIA. and yeah, until this channel basically is intact, it's all good. It really is. But we can also see here that this is the first time in a long time that we actually have three, kind of big red candles in a week, in a row, excuse me. So this is the first time that we actually have a decent amount of a downturn over like a month or so. Because other than that, it's just been consolidation and just a very tiny pullback. But again, as long as we hold the 30-week moving average and the uptrend, I guess you shouldn't be worried. So it works until it doesn't.
What about SMCI? That's the other one that everyone was going gangbusters on.
Oh yeah, that was funny.
It looks like it's wanting to turn.
Yeah, I mean, this is again also amazing chart. Really has just done it. Not the same as Nvidia, but has done tremendously well. But this to me looks a lot more like. But remember, this is on a log scale. So when you see the chart goes vertical on a log scale, blow off top should always be your first, thought really. But again, we also had almost like a blow off top here, and then it just continued. But I will say this, though, it does look a lot more heavy this time around. Again, we are at big support, which is basically the 670, double bottom potentially. But again, we are, for the first time, actually closing a week below the 30 weekly moving average, which is used by the stage analysis for the when you know when to get in, when to exit, and all that. That's the 30 week that has been used in that analysis. So this looks a lot more topping out heavy compared to NVIDIA. So potentially a precursor to what NVIDIA is about to do also. But again, a topping process can take a long time.
Yeah, I just started digging around technology stocks, and that's some of them I'm like, it could turn here. It really well could.
Yeah.
They're getting some heavy selling pressure, and all the insiders, they basically left. They're just selling stock like mad. So that makes me think that those guys also know that a potential slowdown is coming. They see it in the data that they look at.
Yeah. Just trying to find one chart here actually that is very well known. Yeah, I'm just gonna, this isn't planned by any means, but just to show you that potentially this is the can you see it here now? I guess it's good, right?
We can see it.
Cool, cool, cool. This is basically, this is actually comparing, Cisco back in the 2000s compared to NVIDIA. But again, what you're seeing now is potentially the blow off top, the big bull trap, the bear flag, which is actually right here, right? You have the same snapback and then you roll over. And yeah, they are very similar. And actually, I can't remember the name of the chart, but that chart is basically based on Cisco. I don't know the exact name of it, but you have seen it before, I know, when I show it to you.
Yeah, it's a stock bubble.
Yeah,
The
stock
stock
bubble
bubble chart.
cycle, something, I can't remember
Yep.
exactly. That is the Cisco chart. And for now, at least, the SMCI, you got to be worried a bit here if you're in. That's all I have to say. But yeah, we shall see.
Yeah, I see you've got oil up there. What's your opinions on oil?
Long term, very bullish.
Yeah.
Very, very bullish long term. Could we see, we talked about this in your last video as well, could we see some downturn here over the next 3, 6, 8 months? Yeah, sure. But again, this is just a beautiful, like a big 3 impulse fractal again over like 15 years, 10 years, 15 years. And they are, when you break above here and you start to consolidate here, usually that is, like that's very good to say the least.
Ultra
If you're
bullish.
exactly. The lowest I think we can go if we start to spill here again, depending if we see, there should be a lot of support there at 60 roughly. But again, right now we are in this final compressing phase, and yeah, we're getting shown a direction within 3 months or so. We should see a direction in oil.
Yeah, and what if we have a move lower? And a lot of people get scared when they see a quick move lower. I call that the slingshot, where it like pulls everything back before it's going to go way up. Do you think we could see something like that where we get a dip down into the 60s, people get all scared, and then we just rip to the upside? What's
Yeah,
your
for
opinions
sure.
there?
Yeah, for
Yeah.
sure we can. Again, if we get the big recession, usually everything gets sold off. So again, a lot of people that are involved in oil, they have big losses in, let's say, NVIDIA. They have to cover their losses and all that. They have to sell oil. And yeah, we can see that big spill for sure. By the way, fun fact, I think during the global financial crisis, the actual decrease in oil consumption were like 2% in real life. But we did see a drop from 140 to 30. So again, a lot of paper, a lot of leverage is in the system. So we can see that big, big-ish move down. But in my opinion, it should be, again, it should come back up again. The reason is basically that we have had this major complete crash in oil, and you don't often get these 2 times around. This is usually like, completely blow off top to the downside, and yeah, snap back up, and then you actually have a bull flag here. So again, I still would put my money on that oil in the longer term is going up. But yes, we can see that big scare if we see a lot of fear in the markets. Everyone is selling for sure. But I just have to remember that I personally think by all my heart that we are in one of the biggest commodity bull market that you have seen in a very, very long time. And oil is obviously the biggest of them all when talking commodities. That is the absolute biggest commodity that there is when speaking of, you know, volume and trading, you know, the amount of dollars that it's in oil. So yeah, hugely bullish on oil, and yeah, it just I'm confident that we will see triple digit again. It just depends on how we get there.
We're
But
gonna
if
hit that upper line that you got up there, right?
yeah, for sure. That's again, that's not tomorrow, obviously, but
Yeah, right.
the parallel is, and the timing, and you know, the time between, you know, it potentially, and then we're talking, yeah, $300 or so. So
The dip that I'm talking about occurred in 2000, 2001. That's the exact dip. Yep, that
oh,
thing.
okay, yeah, yeah, for
And
sure.
that's where I think we're located. Is somewhere in that spot, right? Yep, right where it's touching. We're like
Yeah,
right before that.
yeah,
So we might not get a huge move lower. We might only go down to like $60 or something. But
yeah. So
if
like a
we see
20%
that,
move, yeah, yeah,
yeah, if we see that, I'm gonna be, and we see a turn off of it, I'm gonna be so bullish, it's gonna be insane.
yeah.
Because I that's when we rip. And the dollar dropped last time that occurred, and the dollar generally drops when interest rates drop. So yeah, I'm looking for that.
Yeah. And just a little side note here, the XOP, which is the oil and gas explorers, the overall chart looks, it doesn't look bad. I mean, so
No.
if we were to have a big drop in oil, usually before that you see a big drop in the stocks and all that that is related to that commodity. But for now, we have this beautiful wedge pattern that has been going on for like 2 years, breaking out, just consolidating, just building energy, and we should, again, I say should because nothing is certain, but again, this is an insanely good setup for XOP. We're looking at only the past 2 or 3 years on XOP. If we
And
start to, let's say, come down here, then you should be worried a lot. So
that's what makes it so difficult because we see the 2 and 10, we see the twos dropping, and then you see a chart like this, XOP. This looks absolutely excellent to me. Like this looks like something I would go long in. And I wouldn't expect a huge, declining move. And even if it does decline, I would still be bullish because oil is still above um, that big, consolidation. So it's like I can't get bearish on this stuff. Like I just can't.
no, again, a
The
lot of
charts.
mixed signals. I completely agree. And again, the timing wise is very difficult to get right. But yeah, also what I think is happening here, again, don't take this, with a grain of salt, again, very difficult. But I think what we're seeing now is the potentially what we saw, back in 2006, 7, where you had this kind of like a downturn here in the CRB, that is the commodity index. You had a huge rally, and then you had this rounding bottom, and then you started to blow off here. I think we can see the same over the next 12 months. Again, timing wise, difficult. And when that started to happen, you actually saw the markets starting to roll over and make, over time, lower lows and lower highs. It didn't crash by any means until commodities started to crash. Then you saw the big drop down in NASDAQ and all that. So I think we could be in for quite a good time for commodities, and especially also if you look at other factors like the gold to silver ratio. I think we can have a huge drop in the gold to silver ratio, meaning gold and silver will do really well, and then people start to sell off, and then the gold to silver will snap back again, only to roll over. But again, I think gold, silver, and energy could be in for 12 months here. Again, 6, 12 months of quite the performance. And then we will see if we see that a big steep drop there in commodities again over here. And that's usually in line with the big indexes, SPY, the Nasdaq also selling off big time. So
Yeah, for some reason, I keep thinking that we're in 2000, 2001, we'll get a tech crash,
yeah,
and that commodities still have a really long way to go. But I mean, obviously, you just showed the fractal there that we were located potentially in 05, 06, 07. I just don't like. I think there's a lot more to go.
yeah, yeah. I agree. I mean, again, that's
Time
the
wise.
crash is just shorter termish. Again, maybe related to the oil, drop if we are to see that. But I agree here. Looking at this fractal alone, which looks a lot like the oil that we just looked at before, hugely bullish commodities. Again, this is a huge game changer. Again, you have the big three impulses. You also know what this means, and then just a false breakdown, and then you rally heavily. So yeah, commodities, in my opinion, again for the next 5-10 years, maybe even longer, is a great place to be. And yeah.
Yeah, I don't know. I don't know if I have any other questions directly. We went over unemployment rate, yield curve, and then looking for evidence in some of the the equities and stuff like that. Um, the bond market always leads the equities market, so people are so focused heavily on equities that I don't know if they know exactly what they're looking at, because bonds are almost always front run everything.
Yeah.
So, what do you got there? Is that the housing
No,
market
it's
or
just
something?
again, just also a chart. This is the median sales price for new houses in the US. Again, also a chart that is very, again, giving a lot of mixed signals. Again, everyone is calling for a housing crash. A lot of people, including you, is calling for the housing to do really well. Again, right now we are still in a good uptrend, and if we are even to tag the lower side of that uptrend, you're only in quotes talking like a 10% move down. I mean, that's not a crash in my book. I mean, obviously, a 10% drop in real estate is on a worldwide scale is a lot of dollars, obviously. But yeah, again, housing did really well in the 70s. They went up just steadily. They outperformed the Nasdaq and the well, not the Nasdaq, but the SPY in the 70s. So again, also a chart that is really difficult for me to get a grasp on. And again, I'm not going to call for it to go higher and lower, because again, I don't have any, I'm not so sure of this on which way to go. I know you think we are, we're not going to crash, but we're going to slowly grind it higher. Again, I have no idea which way to go. So
Yeah, I think the affordability is impacting the housing market, and if rates were to drop for whatever reason, I think the housing market would go up, not down,
yeah,
based off of deficits and low inventory levels. But if they hold higher for longer, maybe they can just grind this thing for a really long time,
yeah,
which is possible too.
yeah.
I just don't
Well,
know how they're going to keep rates high if the economy starts to fall apart.
no,
That's where
exactly.
I'm like, yeah, I don't think they can
Yeah,
do that. I think
no,
if unemployment rate goes up, they'll cave.
they will cut it. Yeah, for sure, They have to.
Yeah.
And also, again, a house, what is that made of? Commodities, and they're going up in price. So, the houses that is already built on its own, again, should go up in price based on what, the bricks and the copper and whatever you have. So,
Mhm.
yeah, again, very difficult. Yeah.
What's your opinion on the dollar? Like, because that also ties into all this. Usually, when I
Mhm.
see is when rates go up, dollar goes up, and then when rates go down, dollar goes down. That's what I have in my head. So, what's your opinion on the dollar right now?
I think the dollar right now is at a very interesting place. The reason is we have actually broken. I want to just give it a different color, because then it's a bit more clear to see the formations. So basically, I want to show two charts. I want to show the Dixie, but also the Dixie divided by inflation. You have the low here. You can clearly see a trend line coming up here. We broke down, came straight back in, and then we finally broke down again here, and then we went lower. So right now, we are below the uptrend, but also within like a longer channel. So again, you have some bullish sides of it. You also have some negatives. You You can see here also today that we are, selling off. We have a lot of wicks going on here. So again, this shorter term setup that actually were bullish, if we start to close below that neckline, all of a sudden you have some short-term bearish momentum. And if we start to come in, lower, the 30 weekly should finally start to push it down. But again, right now I'm not going to call anything because we are at such a, equilibrium, you can say. And I think the next month or so will be very, very telling for where we're going in the dollar. You can see here we're basically testing that neckline today, dipping a bit below there. You can see on the shorter time frames. So this could be like a false breakout from that, and then usually we are going to go lower. But again, way too early to say anything, and we need at least getting into August before we can start to talk about that. And yeah, but actually, the Dixie, I look at that every day, of course, but I think one chart that is a lot more important is actually the Dixie divided by inflation, the CPI, you can say. And I just want to show that actually here for the past, what's that, 15 years or so, 10 years, no, 20 years, Jesus, you can actually see that we've been in a long, basically range here. And in my opinion, we are at some point in time going to crash down there, meaning that the dollar can do well. The Dixie can do well, but against inflation, you will lose. And that is basically, if you invert this, you have the gold chart basically, roughly. And that is what gold is tracking. And I do think we're about to, at some point here, break to the upside or the downside, depending on if we are going back to without the inversion. And when that happens, commodities are in full swing. You have no idea. You can clearly see that this is back in 2001 and 2, collapsing in relation to the inflation. And gold, silver, copper, everything did insanely well for like 2 years. 10 years after that. So, and if we are to see the same again here, you will actually have over the next 5 years, whatever, you will see the dollar lose like 30, 40, 50% of purchasing power. That sounds bad, but I think the other fiats will do a lot worse. So yeah, you have to have your gold. Otherwise, in my opinion, you will get crushed if you have all your worth, in dollars in the bank. You will have the same amount, but you won't be able to buy, nearly as much.
Mm-hmm. And that's also what I think could occur, and that's also another factor why I think the Nasdaq it'll go down and sideways, but the dollar is going to be propping it up.
Yeah,
because the dollar's value is just dropping.
Yeah.
So I think there's going to be sectors that drastically underperform other sectors, but they might just trade sideways.
Yeah, or even sideways to up, yeah, easily.
Yep.
They can do that. So, and you can also see here, this is what's that, like a 1 year triangle coming in here. And again, the reason why I cannot say which way to go is basically if we start to break down there, the dollar will lose in relation to inflation, will do really bad. And if it starts to move to the upside, then gold and silver and all that could actually have some pain ahead of itself. But I think overall, again, timing wise, this will break down. In 1 month or 1 year, it will break down. It always does. That's how the fiat system is made, to dilute the money that is already in the system. And that's what you're seeing here, basically.
Yeah, I'm just trying to think if the dollar would strengthen before it goes down. I'm not sure.
Mm-hmm. Yeah, we see that, we see that, into a recession, the dollar peaks and then it comes down because of all the money printing. So for sure that has happened before. So again, yeah, very possible.
It did that in 2008. It went way up and then it came back down.
Yeah.
Yeah.
And it also did that in the where are we? 2020 here. Yeah, it actually dropped and then it raised again. Okay. A bit different. But okay. But you're definitely correct here, Greg, in 08.
Mm-hmm.
Yeah, you can see here we're seeing the drop first and then it comes back. Is it because no? So it dropped first and then it comes. I don't know. Yeah.
There's some stimulus back there too.
Yeah,
I know
yeah,
they're
for
doing
sure.
stimulus.
Yeah, yeah, exactly. So yeah, again, the dollar will always be more or less always be the best fiat. But again, we can close this one off with this chart here, by the way. But in relation to gold, again, I love gold now, and this chart clearly, in my opinion at least, shows why we should be very bullish on gold. So even though the Dixie could do really well, it is very telling that actually gold has broken out against the Dixie, the dollar index. And again, this was back in 2004. Again, back to your previous statement that that's actually where we could be, as early as 2002, 3, 4. Same thing again here. So you can have the dollar go up, but again, gold should outperform that heavily. Basically, what it is showing here. So yeah.
Gold's our leader. It's going to break first, and then all the commodities follow.
Yeah,
So
exactly.
yeah, and it also goes up when the yield curve uninverts. Rates go down, dollar drops. Yep, all that stuff.
Yeah.
Um, anything else that you'd like to share on your opinions about a potential slowdown or no slowdown of data that maybe you're looking at? Anything else?
No, I mean, there are two charts that is very, very telling that we are having a slowdown, but then also some charts that is very, very mixed signals. Again, is that because the bond market broke in 2020, so you're getting a lot more weird stuff going on? I don't know. But yeah, we have to wait and see. Again, it doesn't crash in a straight line, so I think we will see the rolling over process as it happens, and then we can talk about this one in like 3 months again to see where we are, to maybe keep track of it. Maybe it goes on for 18 months more, going higher and higher, who knows? But definitely now we're having a lot of warnings with regarding to unemployment and the tens and twos. So
Okay.
yeah, difficult, very difficult.
Yeah, that's all I've got. If people want to follow your work, if they want to follow you, how do they do that, Kasper?
Yeah, thank you for asking, Andy. Twitter, as you are on Twitter, I am also on Twitter at USELINKINV. YouTube, I don't do as much YouTube as I used to do, but that's the same handle, USELINKINV. And then I've moved more or less all of the content that I do, at least from the video perspective, to the Substack, also at USELINKINV. So that's where you can find me. And just like you, I am a huge commodity bull, and I think this can go on for a long time. A lot of things changed in 2020, and again, if you can stomach the volatility and believe that this is definitely a commodity bull market, I think you will come out of on top here, within 5-10 years, whatever it will be, big time. So yeah.
Okay. Well, that's all we've got for today, guys. And if you like the content, put it in the comments section. Good job, Kasper. Put that in the comment section, or make comments on your opinion if you think a recession's coming or not. So
Yeah.
that's all we've got for today. Thanks for coming on, Kasper, and we'll catch everyone next time. See you guys.